trillion, AI superchips, nuclear power, and Europe quietly preparing for the next financial shock. This week wasn't just about markets moving, it was about power realigning. From Washington's New Deal with Saudi Arabia to the European Central Bank bracing for disaster, to a massive merger creating a new global industrial giant. Here's what actually happened and why it matters. A strategic partnership or a geopolitical gamble? President Donald Trump and Crown Prince Mohammed bin Salman have finalized one of the largest economic packages in modern US-Saudi relations. What was the goal? Channel up to $1 trillion of Saudi investment into American infrastructure, AI, energy, and defense. On paper, it's a powerhouse alliance. Real deals include Saudi AI firm Humane purchasing around 600,000 NVIDIA chips, massive new US-Saudi data centers with xAI, a rare earth refinery project involving the US Defense Department, and new defense agreements including future F-35 deliveries. Translation: Saudi Arabia is positioning itself as a global AI and energy hub, and the US is backing it. But there is a sensitive layer beneath the surface: the nuclear issue. Civil nuclear cooperation is part of this deal, and that's where concerns begin. US lawmakers warn that any weak safeguards could encourage a Middle East arms race and undermine efforts to limit Iran's nuclear ambition. Officials say enrichment isn't part of the initial agreement, but the final framework remains unclear. This is where economics meets geopolitics, and markets start paying attention. What is the financial impact of that? For investors, it's, strong demand for AI infrastructure and defense, opportunities in critical minerals and semiconductors, but also fears that AI valuations are running too far ahead of reality. For businesses, this means that there is more access to Saudi-backed opportunities, reduced regulatory friction in key sectors like automotive, but also reputational and political risk tied to Saudi policy shifts. For consumers, potential job growth and industrial investment, but also the risk of higher energy prices if tensions rise. What happens next? Everything depends on how strict the nuclear safeguards become, whether Saudi funding actually materializes, and whether the AI investment boom continues or breaks. A smooth execution means stability and long-term growth. A fragile deal could trigger market volatility and regional unease. The next shock is coming, we just don't know where from. The ECB has warned that euro area banks face rising risks of extreme shocks, driven by geopolitical tensions, trade conflicts, cyber threats, climate pressure, rapid technological disruption. Instead of traditional stress tests, the ECB is now introducing reverse stress testing, asking banks to determine what scenarios could wipe out their capital. Stability is no longer seen as the default. Now, why does it matter? Despite current profitability, the ECB believes calm markets may be mispricing risk, especially in AI-linked assets and export-heavy sectors. This is a clear signal. Volatility is becoming the new normal. Now, how does it impact the economy? Banks may tighten lending, business credit may slow, export-driven sectors could face pressure, and consumers may seem more cautious. Credit conditions. If geopolitics or tech valuations crack at the wrong moment, Europe's financial system could feel real strain. Now, best case scenario, banks weather shocks with solid buffers. The worst case is political conflict plus market correction equals exposed vulnerabilities. Either way, Europe is preparing for turbulence, not smooth sailing. A mega merger in global industry. AkzoNobel plus Axalta, a coatings superpower. Two giants are merging to create one of the largest coating companies in the world, with $17 billion in revenue, operations in 106 plus countries, 100 plus brands, target cost savings of $600 million annually. The merged company aims for stronger margins, greater pricing power, higher free cash flow, long-term dominance in industrial coatings. Now, for investors, it means that there is a potential for higher dividends, stronger earnings, but execution risk during integration. For customers, it means that There's more. More complete global coverage, but potential pricing pressure for employees, innovation investments paired with likely restructuring for regulators. Expect heavy scrutiny, especially in niche segments. Now, what is the road ahead of this? The success of this merger depends on smooth integration, regulatory approval, real delivery of promised synergy. If successful, it could redefine the coatings industry. If not, it risks becoming an expensive experiment. This week wasn't just about numbers. It was about power shifting across energy, AI, defense, banking, industry. From $1 trillion Saudi deal to Europe preparing for shocks, the message is clear. Markets are no longer driven by growth alone. They're driven by geopolitics, psychology, and risk. And as these forces collide, volatility isn't a side effect. It's the system. Thank you so much for watching. This is Bridges TV, decoding the forces shaping the global economy. Let's build the bridges and not burn them. Stay sharp, stay informed, and see you next week. Goodbye.